Oh, good morning, folks. This is Shooter. We're going to go over the weekend box scores, primary waves edition. Of course, at the end of the presentation, please review our disclosures. My notes here, we're heading maybe towards 4609 unless we have some kind of bad earnings that takes us out. I don't believe that happens. We get below, support of maybe 455. We head to, 445.25 on the downside. Now, the new format, we're trying to focus in on what to buy, as far as primary waves are concerned, and then what you might want to trim a little bit on. So we're starting off with Square. We're heading towards the breakout, maybe at about 117. Then we get a decent back test to 76. And then we should continue in our leg 2 down here, our cycle wave 1 down to our cycle wave 2. Our 50% back would be up right around our target 1. GNRC has been our radar for a little while, maybe 181 with a back test to 160. We're above the breakout line, maybe our target 1 around 210. I like the thesis on this one, maybe 142 with a back test of 129. Keep in mind, though, we get down below that 50-day again. At the 200-day, if it breaks below this prior low, I'd probably trim a half of what my position was there, and sort of wait and see what it does, because we might come back in and back test this original primary wave around 98.03 if that occurs. But I don't believe that'll be the case, because, we've gotten our low, higher low, higher low, higher low. We've established a decent trend to the upside, and it's a little unusual for it to break lower, but we could do something like this right here. And then obviously once we get a back test, if that did occur, then we'd want to jump back on board. Looking at TDOC, now this is more of a bleed, but still we're going to get to some kind, and this candle caught my attention the most. That indicates obviously that we had some extreme buying coming in there. So looking at maybe 92.18 at some point with a back test to 48. Now, I don't know if I'd hold it through that heat back down to that 48, because, that's more than 50%. I think I would probably be trimming aggressively. Now, looking at iPay, now this is new in my scans this week. And, we're looking for maybe 55 with a back test to 47.50. Sort of a shallow breakout, but still has a decent look to it. Then we added back in ARKK this morning, maybe 60, 66 with a back test of 49. Now, as far as the sells are concerned, let me just talk about that for a second. It's not that I really think you should just sell Microsoft outright. It has some risk to the downside. So if we're going to back test the 23.6 here, which, honestly, we need it. But I look at it as a core position in either case, because it has so much upside. However, now we're getting the rumor mill or should I say the FOMO mill, that, maybe this AI is overdone, that we're not going to see this much production out of it. So, when I say trim, what I mean is, and I want to use blocks. And the reason I use blocks is because I'm trying to capture some of the upside, but at the same time, rather than just cutting a position, I'm going to say, okay, I'm going to set a piece for a 3% trailing stop, set a piece for a 5% trailing stop, and set a piece for 8%, 10%, 15%, et cetera, based on how many contracts I have in a particular position. Now, the one thing I will say with options, as far as swing trades are concerned, it's very hard to start off with. And let me just back up for a second and use iPay as an example. If you come in here and you're starting off, you want to stay shallow on your strikes. If you want to take a starter position in iPay and you don't want to really put in a lot of common positions, but hey, you want to put on 5 contracts and you want to do an October 45 call. The reality is you don't really want to lose 50% of that. So trailing stops become challenging. If you come in and put in a 20% trailing stop, I pretty much can guarantee you're going to get stopped out. You put in a 30% trailing stop, pretty much can guarantee you're going to get stopped out. 40%, you might not get stopped out of all of it. And you put a 50% trailing stop, you got a better shot. Now, sometimes let's say, for example, if I start off with 5 contracts, I might run 1 contract or 2 contracts with no trailing stop and then do 50% on the balance, because I want to try, at this point, it's a starter position. I'm trying to build a position so I can run to that 55. I don't want to get taken out. But at the same time, I get up and I'm 50% in the money. That's when I want to start scaling back. Now I'll come back to 20 or 30% of my gain to try and capture some of the upside in case there's a market event that takes me out. And the difficulty with that is we probably have some market events ahead of us. So, at that point, it makes it a little difficult. So you want to have your stops in place just in case there's an event, like, hey, Russia does drop a tactical nuke in the Ukraine, I pretty much can guarantee we're going down 8 or 10%, which will probably take out, 70 or 80% of your stops or more. But at the same time, do we really want to hold it if it's a prolonged event? We end up with 10 nuclear devices set off and we're holding these positions. No, we don't. I'd rather be off the table at the moment. So, because then at that point, I think we would be in a prolonged period where we have, successive uncertainty, very much, I'm not going to say similar to COVID, but we could have that much of a drawdown from something like that. So looking at Apple, we still see a little upside, maybe 203.66. So, there again, I would use the same type of regime you're comfortable with in using your trailing stops. And then we maybe get a back test around 190. Well, that's what we have for today, folks. Great trading. Until next time.